Hey, this is Jon Johnson with a weekly market recap. All right, so starting off, we have the rates. Rates have been increasing over the past couple of weeks. Really, they've been increasing over the past 6 to 12 months, but definitely over the past week or two, your average buyer is getting around 7%. Now, this isn't exactly for every single buyer. If you're putting down more, 20% versus 5%, if you're going to 15-year mortgage versus 20 or 30-year mortgage, there's even adjustable rate mortgages where you keep the same rate for 5 years and it can adjust afterwards, etc. And all these different types of things, you can be able to get lower rates, maybe in the sixes, some even in the fives. I've seen some in the fours. But if you're going with a normal, cookie cutter 30-year fixed rate, maybe putting down 5%, you're going to be looking at probably rates around the sevens. Which, to be honest with you, if you're renting, you're paying 100% rent, which means that even if rates for mortgage is 7%, 10%, etc., you're still going to be getting a better deal by owning a home, or if you need to be able to move for relocation, if you are having, an additional family member added to the house or a kid, if your main priority is still being able um, to move, the most important thing is the monthly payment, which a good real estate agent can be able to try to find you homes at a price point that works for your monthly payments. Agency updates. We are closing bank statement loans in-house now, which is a pretty good thing. This is for buyers that are self-employed and they maybe write off a ton of their income. We can close those in-house now. Um, I don't recommend 5-1 arms or 2-1 arms to everyone, but there are special savvy buyers, or there are some buyers that are really trying to capitalize on trying to get a lower rate the first couple of years being inside the home. And these type of products can do that. 5-1 arm, they'll be able to keep the same lower rate for the first 5 years. And they can also refinance in between there as well. And they can get many times 1.5 to 2% cheaper rate during that time. A 2-1 buy down is where you pay an additional towards closing. And instead of, let's say, a 7% rate, your first year rate would be 5%, then it'd be 6% the next year, and then the rest of the years would be 7%. So these are different options that buyers have if they are rate/monthly payment conscious. There's a lot of things happening right now when it comes to the news over the past week. In our research overall, the typical age of home buyers in the U.S. has risen to 47 in 2021 compared to 31 in 1981. I'll tell you that I have hardly no buyers that are ages 20 to 30 coming to me. Some are trying to buy homes at that. Very few are, but even if they want to, their income in comparison to their debts is normally not good enough to be able to get, let's say, a pre-existing stick-built homes. I am looking more into manufactured properties, modular homes for these types of buyers and other buyers that want more affordable options. But we're talking about pre-existing stick-built homes. It's tough for them to be able to have the income in comparison to debt to be able to afford them. But as they get up in age 30, 35, 40, they normally have more stable income. Hopefully they decrease some of that student loan debt, maybe some of those credit card debts they built up in their 20s to become much more stable. Zumper released national rent report data stating that one bedroom has reached a new high of 1,503 a month on average. Two bedrooms, median rent 1,800 a month, which is also an all-time high. It's just one of those things that rent keeps going up. Home prices go up 95% of the time. The only time we really saw them go down was during the '08 recession. But 95% of the time, even if it's a recession, they're going up. Rent, on the other hand, 99% of the time, they're going to be going up. So I always say home buying is still a better option than renting if you can find payments that can work out for you and your family. Lastly, NBA released their mortgage application data, and that's at a 25-year low right now, meaning that less people are putting in applications to get mortgages. Although right now the housing market is still not bad, homes are still being sold relatively quickly. You're still competing on many properties for the same home. If we're not getting mortgage applications, that means 2, 3, 4, 5 months down the line, there's going to be less buyers in the portal to get homes, which means that we do start seeing an influx of inventory, which always happens in the springtime. And there's going to be less buyers. That could mean these homes are on the market for a little bit longer than they normally would be. All right. I'm still loving this program, Hometown Heroes. So any questions about it, please reach out. Up to $25,000 in assistance towards our healthcare workers, firefighters, policemen, etc. There's many great things about the program. The interest rate is not too bad on it as well. It's actually lower than a majority of what buyers would be able to get if they weren't going with the program. Just a very solid program that gives buyers a lot of money if the cash to close is most important to them. There's other programs as well that can give assistance. They may not give as much as the Hometown Heroes program, but with both of these programs, these are state of Florida programs, we can close in less than 30 days on them, and buyers can get $10K to $25,000 in assistance towards closing. All right, good. Reverse mortgages. This is also a topic that many people have questions about. Is where people over the age of 62, sometimes as low as 55, are able to. It's like a refinance, except for the buyer is able to not just get a lump sum, but they can also get monthly payments being paid out to them. Buyer still has to pay taxes, insurance, HOA, but they don't have to pay on the reverse mortgage. This can be, it's not for everyone, but if someone's on fixed income and they really need an extra 2, 3, 4, $500 a month, a product like this can really be able to be beneficial for someone. All right. If you have a buyer, or if you are a buyer that is affected by the Hurricane Ian that happened down in South Florida, there are some additional loan programs that are available now through FHA that will allow you to go up to 100% financing. It has more relaxed guidelines because we know some people may have been out of work over the past couple of weeks, maybe next month or so, etc. It just gives people an opportunity to be able to, if they still want to buy another home after this disaster, they can be able to do many different things with it. And there's also a 203K attached to it if a buyer wants to, which is where they can be able to repair their current home if need be. So, or a home they're trying to buy, they can be able to repair that current home they're trying to buy. So many options for people who were affected by Hurricane Ian. Overall, myself and our team, we're going to be available over the weekend. So if you have any questions, definitely reach out to us. And overall, I hope that you have a great weekend and reach out to us if you have any questions. Thanks.